Chinese tech titan Tencent raised more than $1 billion in an IPO for its music streaming platform. Tencent Music is China's biggest online music service, with more than 800 million active monthly users. The shares were priced at $13, that's on the low end of the estimate. The listing put the firm's value at more than $21 billion, less than the Tencent spin-off were aiming for, but still a figure that makes the listing one of the biggest since Alibaba's massive IPO in 2014. The company starts trading on the New York Stock Exchange Wednesday, and as Reuters' Julia Fioretti explains, coming in low isn't necessarily a bad signal.
Tencent is China's Spotify, and it's the country's largest online music streaming app. It's not necessarily a bad sign that it came in at the bottom of its price range. One needn't read too much into a single deal when markets are so volatile and markets are very choppy, and so many companies have had to come back their fundraising targets and their valuation targets. So it's definitely a sign that Tencent Music has been affected by the volatility, and it might have been that they were trying to get more long-only investors who would have wanted a cheaper price.
The listing's the fourth largest by a Chinese company in the US this year. Tencent Music initially planned the IPO for October, but after a sell-off on global markets, the launch was postponed for 2 months.
Tencent Music IPO also shows that the timing is very difficult. They were initially going to launch in October. They then postponed that after the sharp market sell-off. So it's become very hard to catch that market window when markets are up and down so much. And it does mean that is now a buyer's market, so investors can demand lower prices, and issuers, if they want to get a deal done, they'll just have to cut the deal size.
While Tencent Music's frequently compared to Spotify, it boasts a number of social-focused apps, including one for karaoke, and those have helped make Tencent Music profitable, where Spotify is not.